Activity slowed in July as surveyed businesses reported weak expansions in output, new orders, employment and purchasing. According to the latest Stanbic Purchasing Managers Index, business activity fell for a second straight month, posting a reading of 50.6 in July after a reading of 51.0 in June. The report says cost inflationary pressures hit a 16-month high in July as tax changes sharply pushed purchase prices. Betty Kiptum with that report.
The three biggest components of the Purchasing Managers Index, namely output, new orders and employment indices, all fell to 3-month lows in July but remained above the 50.0 no change mark to indicate further expansions. Currency strategist at Stanbic Bank Kuria Kamau said domestic demand improved by the second slowest pace since the lifting of the public health restrictions after the first wave of the pandemic, with some firms reporting a drop in customer numbers. The report shows businesses in agriculture, construction and services witnessed an increase in demand and output, while those in manufacturing and trade saw declines. Firms increased their output slightly, as evidenced by slight surges in staffing levels and the quantity of purchases. With sales growth slowing, the rate of job creation among Kenyan firms eased to the softest in 3 months. Both input and output price inflation accelerated due to an increase in import taxes, fuel costs and shortages in some raw materials. The 12-month outlook by firms rose to its highest level in 5 months, but remained below its long-term average. Despite the grim picture, business optimism improved to 5-month high, signaling increased confidence among Kenyan firms that activity would grow over the coming 12 months. Nearly 1/3 of respondents provided a positive response, while less than 1% of firms being pessimistic. Betty Kiptum, Prime Edition.